So I get a lot of questions about buying a home while being a small business owner. And I want to address this because really as a small business owner to buy any real estate takes a lot of time in terms of looking ahead and planning for it. Um, and really that comes in the form of if you're going to do a traditional mortgage, whether through a bank or a mortgage lender or a credit union, whoever's going to do the mortgage, they're going to want to look at a minimum of 2 years of tax returns, which means you have to have been running your business for at least 2 years to be able to turn in those tax returns. The other thing that you have to consider is that buying a home as a small business owner is a catch-22, meaning you only have so much cash available to do anything with, right? And when you go to purchase a home, when they look at your tax returns, they want to see income. Well, income on a tax return means you owe taxes. And then you have to have all your tax debts paid off in order to get approved for that mortgage too. So when we go in, we have to do this for 2 years because they want to see 2 years worth of tax returns. So you have to be looking ahead and decide what size of home do you want to purchase, or what amount of a mortgage are you able to pay off? Because whatever they do in underwriting really isn't going to determine whether you can afford a mortgage or not. You as a small business owner have to decide how much you personally can pay, whether you do that yourself or you talk to a financial advisor for that. Because when it comes to taxes, the more income we report on your tax return, the higher mortgage you're going to get approved for. But the higher the amount of income we put on your tax return, the more taxes you're going to owe. So all that cash that you have available for a down payment is going to go to pay off all your debt. For example, we could claim that, let's say you're making $500,000 and you want to buy a $2 million home or something. If you're making 500,000 in revenue, but if we were to throw in expenses, I can get you down to, let's say, 200,000. Well, in order to get approved for that $2 million mortgage, they're going to want to see that you have at least $500,000 of taxable income, right? So that means in order to report that, we have to remove all your expenses, and then you will show the target income level that they're going to want to see for you to get approved for that loan. But when they go to do underwriting, they're not going to take into account that all your other business expenses. So you have to consider that. Then you're also going to owe the taxes on that $500,000, and you're not going to have actually earned that amount of money. But you will get approved for the loan that you want. And you can go purchase your home, and then we can go back to reporting all the expenses. So IRS code requires us to report your income, but not your expenses. The IRS assumes that we're idiots if we don't report all of our expenses. But by law, you're required to report your income. So as long as we're reporting your income and you're willing to pay the tax on all that income, we can remove the expenses to get approved for a loan. That's kind of these were the regulations that were passed after the 2009 recession and the housing market crisis. That basically Congress passed bills stating that in order to get a mortgage, they were going to start using tax returns as proof of income. However, they didn't see the loophole that was created there. They assumed that people would file taxes in accordance with tax code, which would present more of a real economical view. The problem is tax code has absolutely nothing to do with real economical view. Tax code says we just have to report income, but we don't have to report expenses. So we can wipe out all your expenses, only report income, you pay a exuberant amount of taxes, but then you get approved for a mortgage. Now the problem is you got approved for that mortgage, but are you going to have the cash to make the down payment on that because you just used it to pay all your taxes? And that's how we get this catch-22. So if you really want to start looking into buying a home, you have to start thinking 2 years in advance, because we have to make your taxes target that income level in order to get the loan level that you want to get approved for the home that you want to buy. Because we don't want to report too much income, then you're just going to owe more in taxes and you're going to have less money for a down payment. At the same time, we don't want to report less taxable income, because then you won't get approved for the mortgage that you want. So keep this in mind as you start looking at buying a home as a small business owner. It really is a 2-year plan that you have to strategize for, that we have to think about, and then you have to realize that that you are going to be paying more taxes in order to get approved for that. Now, the plus side to that is we can amend. So amending, we have up to 3 years to amend. And a very common reason for amending is including business expenses that were forgotten or left off for whatever reason in the past. Now, there is some risk to amending. It does throw up a small red flag at the IRS, but that's really not that big of a deal. And there will be some additional billable time in amending as well. So those are some things that you need to think about when you go to purchase a home, or if you want to purchase a home. So real quick summary here. Start planning 2 years in advance. Talk to a mortgage lender right away to get a target income amount that we need to get approved for a certain level of loan that you think you can actually service that debt, meaning you can make a monthly payment. Because the higher the income report, the more taxes you're going to pay. The more taxes you pay, the less cash you have available for that down payment. So anyway, this is the catch-22 with purchasing a home as a small business owner. So really, that you have to be willing to plan out 2 years, and that's the biggest thing. Talk to the mortgage lender, then come to me, tell us the income level target. We can target that, we can get close to it. We can pull off expenses as best we can to be able to get there, but you will owe the additional taxes. So anyway, hopefully this helps anybody that's starting to think about purchasing a home. Thank you, and have a wonderful day.